Now, we spoke yesterday on the program about Treasurer Josh Frydenberg telling business they need to do a bit more when it comes to investing in their own businesses, investing in the local economy, rather than spending so much excess cash on share buybacks or special dividends. That hasn't gone down well with all business leaders. Some would rather the government stay out of their business. Others, though, do acknowledge that he's got a point. We have seen quite a rise in special dividend and share buyback schemes from a lot of those in corporate Australia. But what's this really about? It's trying to drive a bit more growth in the economy and a bit more productivity in particular. And I spoke earlier to the Treasurer, Josh Frydenberg, about this. Josh Frydenberg, thanks very much for your time.
Good to be with you, David.
On productivity first, Labor says it's been falling consistently under your watch. Is that the case, and do we have a problem now with productivity?
Well, productivity is lower than we'd like it to be, and our 5-year average is 1.1% and our long-term average has been 1.5%. But under Labor's watch, you also saw 6 quarters of negative productivity throughout the year. So, you know, Labor didn't have a great record on it, and as we know, they were going to pound the economy with $387 billion of higher taxes, which wouldn't have helped boost productivity. But
so what are you going to do about it now, though? It's under your watch.
What I outlined in the speech, David, was the areas where the government is focusing on. So competition reform, for example, the consumer data right that just passed through the Parliament, the ACCC's digital platforms report. Industrial relations, and as you know, the Prime Minister set guardrails for a review into where we can do workplace relations
Just
reform.
on that, I mean, you seem to indicate in this speech yesterday, don't expect radical change here. Is that right?
Well, we've set the guardrails, and they are, it's got to obviously strengthen the economy. It's got to protect workers' entitlements. It's got to boost productivity.
Unfair dismissals, is that off the agenda?
Well, look, let's wait and see what the review finds, and that's what Christian Porter's undertaking. We've also got 2 important pieces of legislation before the Parliament, and that it relates to boosting a law-abiding and creating a law-abiding workplace, particularly in the construction sector where it hasn't been too law-abiding with the CFM EU and others running amok.
Sure, but you're willing to look at all manner of IR reforms.
There's a review, but with certain guardrails. But the other area is deregulation, where Ben Morton and I are working on cutting red tape. And as it's been pointed out, it's simply unacceptable in Australia to have an iron ore project that takes 10 years to get an approval, 4,000 separate approvals required. That's a disincentive to investment. So I outlined those areas together with infrastructure
and then you
health
went
and education.
To what the corporate sector should be doing, and you know, some don't normally like the government's telling them what to do, but your point is a valid one about the increase in special dividends and share buybacks that we've seen from corporate Australia. What's the problem with that?
So I pointed out the fact that in the last 12 months we've seen $29 billion worth of share buybacks and special dividends compared to an average of $12 billion over the last 4 years. And speaking to people in corporate Australia, they point out that actually share buybacks are becoming the default option instead of necessarily investing in growth and in capital deepening and other opportunities. Now, CSL, Cochlear, Atlassian, Seek, they're companies which are highly innovative and are growing. And that's where, you know, I'd obviously like to see the focus of more Australian corporates. That being said, those decisions are matters for the directors, for the executive teams, but bearing in mind this is a trend that we're seeing, and I was pointing out that there are maybe opportunities instead of share buybacks for going for growth.
Is this holding back growth?
Well, I think if you look at the individual cases involved, some of those companies do have other opportunities afield as opposed to just buying back their shares.
Well, I think there was one big special dividend payout from BHP, wasn't there, that really fueled that $29 billion figure you talk about during the year. Was that
Well, they're not the only ones.
Is that a bad idea, though?
No, well, it's not for me to opine on an individual company's individual decision. What I'm saying is
that was a $10 billion decision.
What I'm saying, David, is there's a trend here. And when it comes to capital allocation, businesses may have increased cash coming through the door, either through operating cash flow or through asset sales. And they need to have a really good look at what are the opportunities for growth, because ultimately growth is in the long-term interests of the shareholders and the Australian economy.
But here's the thing, I mean, it's one thing to, you know, make your view to the business community, tell them what you think, but you can actually do something too. You're in government. You could change the tax system. You could change the incentives that are there. And at the moment, there is an incentive, isn't there, for dividend payments by companies, because we are virtually the only country in the world that has that full dividend imputation system where, you know, franking credits are fully paid to shareholders. Doesn't that incentivise these dividend payments?
They're actually separate issues. It's not the franking credits issue. It's the share buyback and the pursuit of that by companies when there are other growth options.
And dividend payments.
But in terms of special dividends, not all of them are fully franked, as you would appreciate. But where our focus is on is how do we enable business, which employs 9 out of 10 Australians, to grow.
So how do you do that?
And that's the IR, that's the dereg, that's the competition reforms, that's the tax reform. See, for example, in tax, obviously we had the debate over the big company tax cuts, but we did reduce company tax rates for companies with turnovers of under $50 million.
And that's it 25%. Now? You won't return to the top?
That debate's been had, and I made that point in the speech, right? So that is not on the agenda. And the Prime Minister and I both made that very clear during the election campaign. What is the focus for the government is having passed legislation to reduce the company tax rate for businesses under $50 million, the extension of the instant asset write-off, which is going to be, again, good for those small and medium-sized businesses, but also the $2 billion securitisation fund, which is all about getting greater access to capital and finance for that SME sector. They're the things that we are doing which are reducing the cost of investment.
Are you willing to look at other measures, though, and in particular some sort of investment allowance to encourage business to invest in productivity-enhancing assets and infrastructure? Is that something you look at?
So 2 points. The first is we currently do have a R&D tax incentive. We use the tax system, and that was $2.8 billion of taxpayers' money helping to support research and development and investment.
Out, though, it's demand-driven, and it's been down.
It's demand-driven. At the same time, the BCA and others have raised issues about investment allowances, and they have raised that with me. So
is that something you're open to?
I'll keep that dialogue going because I think that's important.
What merit do you see in that?
Well, we're focused on outcomes, and the outcome that I want to see is a boost to capital investment.
And could this help?
Well, the business community has put that forward, and obviously I've got to, and the Prime Minister and the Finance Minister and the government, we've got to weigh up how we look at these various options and the spending of taxpayers' money.
It would affect the budget bottom line.
And we've also got a surplus.
And this would affect the surplus.
These initiatives do have an impact on the budget bottom line.
Labor took to the election what called an Australian investment guarantee. Would allow businesses to immediately deduct 20% of an eligible asset over 20 grand. Would have cost $1.8 billion a year. What do you think of that plan?
Well, it was criticised by the Grattan Institute as being old economy. It didn't really focus on the intensity of the R&D or investment spend of particular companies.
So you would replicate that?
And we always look at our own options, not Labor's. But the key point here is, David, we don't want to spend taxpayers' money in getting businesses to do what they otherwise would do. That wouldn't be a good use of taxpayers' money. What we do want to do is encourage the environment to see more investment, because the whole issue of productivity is about generating higher wages and higher household incomes. And productivity is based on 2 factors: capital deepening, which is that capital investment, as well as what is called multi-factor productivity, which is about how you get better managerial practices and you interact better between capital and labour. They're the 2 things that make up productivity, and the capital deepening one has come down to the point that some people say we've got a capital shallowing, and that's why I'm prepared to look at other alternatives.
So, I mean, just to put it in simple terms, there are a lot of risks to the global economy we know going on right now. If this does start to really hit our economy in a bad way, the things you're looking at are some sort of investment allowance for business, and some modest within the rails industrial relations reform. Is that about it?
Well, the speech actually detailed about 8 or 10 different areas where we are focusing, and I'll give you one good example, which is $100 billion on infrastructure. We've got 160 major projects currently under construction, 120
But that's staged over 10 years.
That is staged over 10 years.
I'm talking about immediate...
But that's money that's going out the door now. In terms of...
Can you speed that up?
Well, we're prepared to look at various projects that can be brought forward, but we have to bear in mind capacity constraints and also working cooperatively with the states.
The approvals that you need.
But you've got infrastructure, competition, deregulation. You've also, importantly, got tax. But the other area that is not as much talked about, but is really important to productivity, is health and education. There's a big skills agenda, David, and as you know, we did the Joyce review and we announced the National Skills Commission. So there's work going on there, but also health. I mean, it's a national tragedy that there is 65,000 people in Australia a year who try to take their own life, and that 8 Australian families lose a loved one a day. And the BCA estimated that 6 million business days are lost to mental health related issues a year. So I've asked the Productivity Commission to do a report into the economic costs of mental health, but also how do we boost social and economic participation and meet that challenge.
The G7 summit that's been underway in France, Scott Morrison's been there, a lot of focus on the trade war between the US and China. Look, Donald Trump goes from day to day saying different things here, but he has given some encouraging signs that negotiations could resume. There's hope for a deal with China. I mean, how much stock do you put in that?
Well, they are encouraging comments, and certainly we would welcome more dialogue between China and the US and a de-escalation in the tensions. But I also put the caveat on it that these issues are very complex and the differences between the US and China are real. So I wouldn't jump to conclusions, and the Prime Minister has also been cautious in his commentary on this. Let's just wait and see how it plays out.
Josh Frydenberg, thank you.
Good to be with you.